As the UK sees the hottest winter's day since records began, questions are being raised as to whether or not we're doing enough to stem the rising global temperatures. As investors, what should we do? Well, Bluefield Solar Income Fund taps into the demand for green energy. James Armstrong is Managing Partner and Investment Advisor to the Bluefield Income Fund. He joins us now. James, welcome.
Thank you, Jeremy. We
spoke to you 6 months ago. How are things going in this market, which, as we said at the top, is really beginning to come through as a proper investment plan?
Yeah, I mean, we IPO'd the Bluefield Solar Income Fund just 5 years ago. And at that stage, it was July 2013, we were the first solar fund to be listed in London, investment company to be listed in London. And since then, it's gone from being what was a relatively sort of new investment theme to probably the single biggest investment theme you can see globally anywhere. And the UK is no different from that, and the city has supported the growth of renewables. And the Solar Income Fund is doing extremely well. We've just delivered this morning a very, very strong set of results. We've got very significant earnings and revenue growth, and that has been backed up by 5 years of consistent high dividends and earnings. And so for the financial year we're on, one of the attractions for our shareholders is that the covered dividend that we are on target to deliver this year is 7.68 pence per share, or based on the share price, that's still 6% a year. So it's a very, very attractive revenue stream.
What has been the total return then since IPO?
Again, it's been very strong. We've delivered over 56% in 5 years, which for a defensive sterling income fund, where the majority of your revenues are long-term contracted through regulatory revenues, it's been a standout performer. If you want to sort of equate it to other indices, the FTSE 100, it's almost double what the FTSE's been in that period. So it's been a very strong performance. And
has it been lumpy or has it been consistent?
It's very consistent, partly because the underpinning of that return is our very high dividend. So when we're paying out 7.6 pence per share, as we are this year, and it rises with RPI, you know, 75% of the return each year of that, circa 10% a year, is coming from dividends. So it's a very strong, stable performer.
And what is the capital value of the fund?
So the market cap is just under £500 million. So we're one of the biggest solar managers anywhere operating in not just the UK. Gross assets 650 million, so we're a big player in the solar market, and we expect obviously over the coming years to see some more growth. But we've captured a fairly big part of the UK market. So what we have is a very diversified, very high performing portfolio.
Yeah. How are things changing? Because when we last spoke, we were talking about the business was changing from a government point of view, from a support point of view. Yep. And my understanding is that new entrants into this market don't get the same benefits that you get in some of the longer held assets.
Yeah, that's right. So the renewables market in the UK, as it was around the world, was stimulated originally by government subsidies. So the UK introduced regulatory revenues, which meant that because the cost of actually installing solar or wind was higher than the merchant price of power, there was a support mechanism put in to incentivise capital to come into that market. And so we have played in that market, as I say, and being one of the biggest participants in the UK solar market. And so of our existing portfolio, about 60% of our revenues are regulated, and that means that at the outset you have 20 years of revenues which are index linked to RPI, and then the balance, the 40%, is selling the power. So because you have with solar, it's a very simple bit of infrastructure. You have a very stable cost base. You've got the ability to produce very stable revenues, which can then be converted into very stable, attractive dividends.
How do you see the market developing from here then?
So what's a very big trend? So why is, if you look at infrastructure as an asset class and then the subset of renewables being the single biggest part of that in the coming years, it's because of cost reduction. So renewables, and particularly solar, has seen very significant cost reduction. So, for example, I've been in the solar industry for over 10 years, and in that time, the installation cost of solar has come down by 90%. So you know, that's the kind of cost trajectory that is very significant. And what it means is you're seeing the opportunity for people to be able to build solar assets which are economic without any government support. And that's a great place for the renewables to be in. So for Bluefield and for the Bluefield Solar Income Fund, we expect the non-subsidised market which is just around the corner in the UK, to be a very major investment theme over the next 2 to 3 years, and we would expect to be a major player in that.
What about the future for Bluefield? Are you going to expand out into other renewables, or are you just going to stick with what you know and continue to deliver at this 6% yield that you've got at the moment?
Yeah, I mean, our big focus, we view ourselves as a group. The Bluefield Group is a series of companies, each with their own disciplines, and we have, so we view ourselves as being far more than just a fund management group. We have an excellent and highly experienced investment team, but we also have we employ actually more engineers than we do actual investment people. And why I say that is because we think to deliver for institutional investors and our shareholders, we think that the way to maximise returns in solar is to be able to have different skill sets across the value chain. And so that means for the UK market, the reason we have such high performance is because we are able on an incremental basis to really drive out earnings and revenue growth. And we're going to take that model around the world with looking at as solar markets grow up. And so you should expect to see that Bluefield will be launching different funds in different territories over the coming years. Yeah,
and you see presumably at the same time competition increasing as well, because this is a burgeoning market now, isn't it?
It is. I mean, at the moment there is, yeah, but you're also seeing the amount of capital expenditure that needs to go into these markets as we see this, going to your opening comments about how do we decarbonise over the next decade or so. It requires vast amounts of capital, and the way that we have always looked at this, we don't view us as just sitting there buying operational assets. We have the expertise at the development and construction funding stage to be able to go in at the right price point for our shareholders, and so we think we have a fairly unique model in order to be able to exploit that incredible growth. And when you look at the statistics about the amount of capital that's required to go into renewables over the next 5 to 10 years, it's one where we think we're very, very well placed to be able to exploit that.
Well, look, it's interesting to be able to catch up with you again, and thanks indeed.
Great to see you again.
For your time. James Armstrong is investment advisor to the Bluefield Income Fund.